What's up, guys? It's Josh with JF Trading. It is Thursday, 7:41 a.m., May 11th. Hope everyone's doing well. I'm going to run through some pre-market movers this morning, as well as a couple of issues in the SPYs. As you guys know, we are trading at the highs. We are within 0.25% from the all-time highs. Let's see what happens with the markets. Usually when we get to tops like this, things start to trade sideways for a little bit. Let's see if we get some announcements that hit the tape that will either bring us higher or bring us lower. Not entirely sure what will come next. I don't think a lot of people do. But the next relevant levels are obviously 240, and then below us would be 237, 238, around that level, and that's the range to the bottom, to the low side, to the low end. But you guys had recommended a couple names. Going to run through some of those. I'm sure you all saw Snapchat last night. Jesus, goodness gracious. Since this company IPO'd, I've been saying that this is a bullshit stock. This is a company that loses money hand over fist every single quarter. They're not going to make money. The only potential they have is a potential acquisition. Maybe they get bought out in a pure stock deal, but I just don't see this company ever doing anything serious in the long run. But then again, I'm sure a lot of people have that thesis as well, and maybe Evan Spiegel's out there to prove everyone wrong. You never know. But the stock was down 25% last night in aftermarket trading. We're trading actually just above $18 right now, which would put all of the institutional investors in some danger with their positions. I believe the lion's share of the institutional stock is held at around $16 and $17. So we're coming up on their pain threshold, which is always something that I like to see. It's always nice to see an investment bank lose money because they're the fat cats, and to be quite honest, fuck them. They're the ones that rig the markets and make the money hand over fist every day. So it's nice to see something blow up in their face, kind of like how Facebook did when they IPO'd. I'm sure you guys are familiar with that whole debacle with the stabilizing bid getting cracked. That was pretty interesting. But a couple of recommendations I had were COMM. This was an interesting stock. You had to go back to the monthly to really kind of find the levels. But if you take it from the lows of, of October of January 2013 all the way to the high of, November 15 to the low of February 16, you can retrace, or you can put forward some of the extensions in the fibs, and it comes up on some interesting levels. This is the daily. So if you can see, it actually trades with the fibs pretty well, surprisingly well, for a stock with a beta like this. But we had a big down day a couple days ago, and it bounced pretty significantly off the 78.6 fib retracement. Tested it on that day, and we're just having a dead cat bounce from there. So I guess investors do still like the fundamentals of the company. They're still earning money. They're still worth something. There's still some growth potential. So keep an eye out next for $38. Watch out for 35. Definitely levels you want to keep an eye on. Let's see, COMM. Then we got HIMX. HIMX. So this is an interesting one. We have a pretty big range here. We've been range bound for quite some time. It's down pretty drastically from the highs back in March of 14. But let's zoom out. Let's get a bigger picture of what the hell's going on in the stock. So if you can see, we've had some variability in the prices. We've had a run up, and then we've had an immediate correction, and we've kind of just reverted back to the mean over the last few years even. Let's pull up the volume profile. I'd be willing to bet you that the average price is somewhere within that range. Yes, of course, I am correct. So this is a very interesting tool. The volume profile really shows you where the average price an investor owns throughout the time frame. So obviously when investors are all long within the same range, they kind of want to keep it within that range for the most part. Obviously some are short, some are long, so there's insurance to keep the stock higher, keep the stock lower, for example. So this is a stock that doesn't really have a clear trend, hasn't been in a trending environment for quite some time. And there's just very little correlation to the overall markets because, as I'm sure you're aware, the stock market's just straight up. So this is something to maybe diversify your portfolio a little bit. I'm not too sure the fundamentals of the stock. I know this has had some pretty drastically down days in the past. I've traded pretty extensively in it before. So it's definitely a stock to consider, maybe size down a bit. It trades pretty variably. The intraday moves aren't too great, but the gap risk is pretty significant. So it's definitely something to keep an eye out on. And then last but not least is STRP. Everyone knows what's going on with this thing. But to be completely honest, I haven't really seen a stock move from $36 to $90 to $105 to $130 to $150 all the way to $235. Now this morning we're trading lower pretty significantly. We're trading back down $178, so we're gapping down $50. So quite the move. This is the stock that all the telecom community or companies are bidding for. So there's a warfare going on with this one. So be careful. The gap risk is tremendous. This is a stock that'll blow your whole life up. I knew a guy once that was short. I forget the issue, but he was short a couple thousand shares of a stock that ended up running $70. He ended up getting blasted out of the position at the top, and he lost like a couple hundred grand. So it's a very real possibility to get hurt in stocks like this, especially if you're shorting naked. Keep that in mind, guys. I'll pull up the daily one more time so you can get a feel. But just look how overextended this is. It's absurd. Absolutely absurd, and it's really not a company that you want to short, because it could get bought out or taken over any day. And just keep in mind America's history in being positive towards telecom monopolies. That's what Clinton did. That's what got us to rally in the 90s. But yeah, appreciate it, guys. Thanks for watching. If I messed anything up, comment down below. Any suggestions, comment those down below as well. If nothing else, like the video, give me a subscribe. I will be back with another video after the bell. Good luck trading today, guys. Cheers. Build the wall.